little bit of a mistake to say it's just been tech, because the reality is that if you look at the technology sector in an equal weight basis, or just look at the average technology stock, it's actually underperformed the S&P 500. What's really worked in the last, I'd say, 2 years, and really the last 10 years, is high quality large cap stocks that can operate in the environment that we're been given. And the environment, we've described this very clearly, which is we're in a situation where you're in a fiscal dominance, where the government is just getting bigger and bigger every year. And in doing so, they're essentially crowding out a good chunk of the private economy. And so who benefits in the world that we live in? Large cap companies with scale who can operate in this environment. And that's what's working. So it's not just tech companies. I mean, it's consumer discretionary companies, it's healthcare companies, it's even some energy companies. Okay, like if you have scale and you're operating well, that's what's driving the index higher. That's what has been driving the index higher. That's starting to change a little bit here recently, with the Mag 7 underperforming since July, and there's a bit of a broadening out going on. But the broadening out is still happening at the sort of quality level, meaning the market still doesn't really want to go down the quality curve, or to companies that have bad balance sheets, et cetera. They're just going into different high quality stocks across the complex.
Mike, we're kind of just starting to get into the teeth of this earnings season. We've had some really good numbers coming out of global Wall Street so far. What do you think the market needs to see out of corporate America over the next couple of weeks in terms of earnings?
Well, you're right. I mean, like as usual, companies have managed the numbers lower going into the quarter. That's not unusual. This quarter was a little bit more negative in terms of the revision. So the bar has been lowered. They're going to jump over the bar. And with the market, like what investors are what they're going to buy are companies that not only beat the lower bar, but then give you some confidence that there's actually some acceleration coming. The thing that's been missing in the last 3 or 4 quarters is we don't have any broad acceleration in order growth, or where's the exogenous positive growth shock going to come that's going to lift all rising boats. And so that's why it's become very idiosyncratic, right? That there's a lot of winners and there's a lot of losers right now. And there's share gains going on. And those are the things that investors are keying off of. Who's operating well in this environment? And I think that's going to continue to be the game that's played.
I look at Mike Wilson like NVIDIA. You got Joseph Moore, covered. I know you guys aren't on speaking terms, but when you listen to a guy like Joseph Moore on NVIDIA, at your Morgan Stanley, how far out is your terminal value on Mag 7 and on the rocket stock NVIDIA? Do you have to justify its existence by going out not 3 years, but 7, or dare I say a decade?
Actually, Joe and I had dinner last night with some clients, so we are speaking.
Okay, well, tell us about the dinner. No, stop. This is too much. Tell us about the dinner, Mike Wilson. Give us some insight.
It was very enjoyable. It was a very enjoyable dinner with about 20 clients. It's excellent food and great conversation. But Joe, I mean, look, Joe has had the right view. He's been very bullish on the AI winners, and he hasn't been very bullish on the broader semiconductor complex, right? And this is a perfect microcosm of what we're just talking about. Even within semiconductors, okay, you have the big winners, which everybody knows, and then you have a bunch of companies that really just aren't seeing any acceleration in their business because the global economy is kind of and that's what we got. And so in the case of NVIDIA, I mean, Joe's had a great call. I mean, he's not looking 7 years out because it's silly to try and predict that, but he is looking out probably several years. We talked about that last night, which is there's a lot of visibility for 25, and then 26 is when the visibility starts to come down. So the stock will start to discount that at some point. But right now, the momentum is quite good.
I mean, Mike Wilson, I got to ask this question. We got to go to break, and we're going to come back with Mr. Wilson if he deems to. Solid. Mike Wilson, when you heard that James Gorman was going to Disney, were you like the football player leaving the field, we're going to Disneyland? I mean, what were your thoughts when your fearless leader who changed your company announced he's going to wander over and help Mr. Iger at Disney?
Well, that was a while ago. He's now the chairman of the board. It doesn't surprise me at all. James is really, really good at this. Managing companies. He did a great job here. I wish him the best, and I think it's exciting for him. So it's the next great chapter for him.